Hi everybody, my name is Nicola and today I'm coming back with another video. Today we're going to talk about how and why to invest in crypto without investing in crypto. Now the concept might sound confusing at first, but it's going to become much clearer throughout the video. The way we're going to do this is by, first of all, looking at what is crypto and what has been happening to it. Then we will dive into what problems arise with direct crypto investing, and we will run it off by looking into how you can avoid those problems. So let's start. Cryptocurrency is digital currency. It is decentralized through a distributed ledger technology, typically blockchain. We're not going to be focusing into the technology component of cryptocurrencies, as that's not really the purpose of the video. They have also become investment opportunities, as anyone can invest in them through initial coin offerings or ICOs. Bitcoin is the most popular example, as the price of a coin has jumped from $100 in 2013 to $20,000 in 2017. Now, that's basically left most people asking two questions. The first one being, how the hell did that happen? And the second one being, why the hell did I not invest? And even though those questions may be valid, if we look at Bitcoin from the perspective of a successful startup, then the valuation jump doesn't look as fascinating. If we look at market cap of Bitcoin 1 year into its existence and 8 years after, we can see that it has jumped by 500 times. However, if we compare it to Airbnb, we can see that the valuation jump is exactly the same, a little bit higher even. The only difference is that most people could invest in Bitcoin, but only institutional investors could invest in Airbnb. Now, I know that with Airbnb, the 500 times increase doesn't necessarily mean that investors increased their investments by 500 times. It all depends on the contract, but the point remains relevant. Bitcoin's valuation jump isn't as unique as it might seem. Now, focusing our attention on crypto, there are reasons for that price increase. One of the main drivers is that cryptocurrency is a play on the war on cash. We're not going to dive deep into what it is, but if you want I can make a separate video dedicated to that. But for now we'll just say that it's a trend of money going cashless. Bitcoin also enables a decentralized solution for money storage, which means more protection. And it also provides the opportunity to implement smart contracts. Now, we're not going to discuss whether those factors fully justify the valuation, because that really depends on your personal opinion, view of the market and other factors. But generally there are reasons why some of you would want to get exposed to the cryptocurrency market. The way most people do it is through direct crypto investing, which basically means that you invest in cryptocurrency coins, as you would with, well, regular company stocks. However, there are problems that arise with the effectiveness of this type of investment. These are caused mainly by two factors. The first one is that the market is highly volatile, and if the economy takes a turn for the worst, the crypto prices are most likely going to plummet. The second one is that there is little room for diversification, which is caused by the fact that 77% of the market is attributable to 5 cryptocurrencies. In addition to that, the correlation between Bitcoin and other currencies is very high. That means that if the price of one currency has gone up, the prices of others have most probably gone up too, and vice versa. So that leaves us with a problem. There are reasons for us to like the crypto market, but we don't want to bear too much risk. We don't want it to become a boom or bust story, where we either grow our wealth or lose all of the money. So the way to maximize those positives while minimizing the negatives in investing is usually through diversification. However, here the diversification is different. There is little point in investing in different cryptocurrencies, at least for the foreseeable future. As we've already mentioned, the correlation between them is high. Instead, you could invest in companies that are exposed to crypto, but are concentrated on generating wealth in other ways. That way, if crypto works out, great, those companies benefit. If it doesn't, those companies have other parts of their business to prosper. Now, I'm going to show you some companies that offer that opportunity, but before we start, I'd like to mention that I don't believe that these companies are the only ones. These are just the ones I found the most interesting. I also don't imply that they are all great investments. I just think that you could add them to your watch list. We're going to start with companies producing mining components. For those that don't know, mining is the process of coin creation with the usage of computer power. The first company is Advanced Micro Devices. It produces graphics cards for mining. The stock is up 24% over the last year. I'll be careful with this company, to be honest, as over the last 10 years its sales and margins have been rather inconsistent. They have been growing the last 2 years, but how much of that is sustainable is up for a discussion. The company is trading at a 38 times EBITDA multiple. Next up is Nvidia. The company produces chips for mining, which accounted for around 7% of total sales. This company and its shareholders have enjoyed very rapid growth. Over the last year, the stock is up 53%, and that has been in line with the revenue growth. The current multiple is 38 times EBITDA. Next up, we are going to discuss companies that are exposed to crypto trading. And the first one is, well, Goldman Sachs, which is the first major bank that has announced that it's going to launch a crypto trading desk. The stock is up 3.5% for the year, but it is down 16% if we just look at the last 6 months, which might present an attractive entry opportunity. The stock is currently trading at 10 times earnings and 1.2 times book value, which compares reasonably to other American banks. And now next up, we are going to look at Nasdaq. It's the first major exchange that's going to implement Bitcoin futures trading. The stock is up 32%, and Nasdaq has been demonstrating stable sales and expanded margins. So at 15.5 times EBITDA, this might be an attractive investment opportunity. Now, last but not least, we are going to look at companies that allow you to make payments and purchases with crypto. Firstly, let's look at Overstock. Now, this is probably the most interesting one. It's the first e-commerce retailer that has enabled purchases with Bitcoin. And for this, it charges a commission fee with Bitcoins. And the most interesting part is that 50% of those it keeps as an investment. So the stock performance is tied to Bitcoin very heavily. The reason for that is that the company's CEO is a huge crypto believer and is actually considering leaving to fully dedicate himself to crypto. So considering the potential management change and the level of connection with Bitcoin, you might be better off investing in Bitcoin directly, to be honest. Lastly, I would like to mention the big four of e-payments, those being PayPal, MasterCard, Visa and Square. All of these companies, just like crypto, are placed on the so-called war on cash. So if crypto gains enough momentum, you can probably expect these companies to jump on top of the trend, especially since the companies have been in and out of making crypto a part of their service. These four stocks are up 62% combined over the last year and look like solid investments. Now that's it for today. Thank you so much for watching. If you like the video, please subscribe to the channel. I'll be trying to make more videos like this, and also drop a like if you like the video, or maybe just drop it for no apparent reason, as it helps out a lot. If you have questions and suggestions for the next video, let me know in the comments down below. That's all for me. I'll see you next time. Peace.